Hi, good morning. This is Mike Lodge. I am the business advisor, and I'm glad that you've joined me. It's a beautiful day out. However, as you notice, I have a sweater on because it is now about 51 degrees outside. When I woke up, it was 42 degrees, and that's slowly gone up. But it's cold this morning. It's like a cold winter morning. And that's okay. That's life. But I apologize for wearing the sweater, but I'm cold and I have to warm myself up. It's just one of those things. We just need to stay warm in this winter weather. Listen, I wanted to talk just a little bit about what's going on in the economy at the moment. You notice I'm looking down, it's because I'm scrolling on another computer to see what I want to read here. One of the things that we should be concerned with is inflation just isn't going to go away. It's going to stay here and stay here. And now that we also have a war in Israel, now we have higher costs. And those higher costs come into effect with the cost of shipping oil. It's gone up. So in today's report, the cost of shipping oil has skyrocketed since the Israeli-Hamas war erupted. Shipping costs in the Mediterranean region have jumped more than 100%. Risk. Companies have to look at risk, so they have to charge for that risk. Freight rates on 16 global trade routes surged by the average of 50%. On top of the prices crossing at $90 per barrel, we now have significantly higher shipping costs. Yet another battle in the war on inflation. By the way, I saw another article this morning that those individuals who are now having to pay back their student loans are highly concerned about inflation. They're now having to pay this big chunk of money every month on their student loans, and they also have to worry about inflation. So now their cash flow is very, very tight. And that is one of the problems that we have in the United States at the moment, is that savings have gone down. The average amount of savings is very low. And now we have other issues, such as paying back student loan debt, which I believe they should pay back because they did sign on the dotted line of that contract. Just like when we buy cars or homes or other issues that we have on time, that we've signed the contract on time that we're going to pay this back. We signed that, and we knew very well that we were going to have to pay that back because we signed a contract on a loan document that said, okay, we're giving you this much to buy this new car. And by the way, here's a contract at 4%, whatever it was at that time. It's now up to about 20% on some of these used cars. Now you owe that money back, and you have to do it on a monthly basis. What's good about student loans is that there's no assets to come after. If you default on that loan, there's no assets to come after, but you're going to be in trouble. It's really going to be in trouble for you if you default on a student loan. So here we are. We're in another situation where the cost of gasoline is going to start coming up here pretty soon, and the cost of shipping that fuel has gone up. One other thing, I read this article, and let's see what you think about this. It says that credit card delinquency rates continue to rise sharply now at March 2020 levels. The delinquency rate on credit card debt for those aged 18 to 29 is now at 9%. For those aged 30 to 39, delinquency rates are up to 7.5%. Delinquency rates have more than doubled from their lows since the Fed started raising rates. All as excess savings just hit their lowest since the pandemic. We expect higher delinquency rates to go up. So when you hear economists and you hear the government saying, oh, the economy is just fine, it's not fine. By the way, I wanted to tell you one other thing. Let me go to my other app. But we're hearing about some layoffs, okay? And this layoffs is not a good sign. And if we look at these layoffs, it's going to continue. As we go into this recession, we are going to see more and more layoffs. Don't like it, but we're going to have to deal with it. And we have to be prepared for it. By the way, LinkedIn is to lay off 660 people across its engineering and product talent and finance teams. They announced that yesterday on Monday. It represents about 3% of their employees that's currently employed there. The other issue is Rite Aid is going into bankruptcy, which means that pharmacies will keep dwindling. And we have to look back at the history of this, because we saw that many other drugstores have begun shutting down their stores. If you look at CVS, it's closing 300 stores per year. Walgreens announced in June that it would close about 150 U.S. stores by next summer. And Rite Aid is going to close between 400 to 500 stores as part of their bankruptcy proceedings. That means that we're going to have more and more people laid off. We're also going to have less opportunities out there and choices on where to get our drugs from. Well, that didn't sound right, did it? Okay, where we get our medical prescriptions refilled. That's a better way to say it, right? So as we see this, boy, what is wrong with me? As we see this, we have to be concerned about the ability to respond to our medical system and the needs of medication for patients, and how they're going to get to it. Who's going to fill that void? That's the question. Who's going to fill that void? Are we going to see a big consolidation of companies come together so that we don't see that? Don't know yet. It's just too far in the future. Well, it's not too far in the future. It's happening right now, but we just don't know who's going to come in and pick up the tab. Hopefully it's not the government, because the government screws it up every single time. So we have to be very concerned about this. Also, by the way, Rolls-Royce is going to axe 2,500 jobs. So the economy is not strong, okay? Healthcare is going to be hit hard over the next few months, and we don't know exactly, because healthcare costs have continued to rise. Even though you hear that there is a success rate of lowering the cost, healthcare costs have gone up. And so if we continue to go on this destructive spree that we're going on in our economy, and not sit down and say, okay, how can we resolve these issues? We're just going to continue to go on and on and on, and we're going to go into this inflationary time and into a recession. It's just going to keep going on for several years. It's not going to be cleared up in any time soon, because no one is working on the problem. Feds were too late. Federal government has spent too much, and American industry just can't sustain the losses anymore, so they've got to start shutting down. So as we get closer and closer to the end of this year, we are going to be hit by some more financial bad news, I'm afraid. And we're going to get hit with a black swan. I just feel it coming on. And we have to be prepared on our personal levels, our personal finance levels. So that means that you and I are going to have to sit down very carefully over the next 2 months, November and December, a little bit of October left, but November and December, and really go over our personal budgets and see exactly what we can do. We know that our savings have gone down. The delinquency rates on credit cards have gone up, and it's at the highest it's ever been. not delinquency, but the highest of credit card debt is way up there. So you and I know that there's something coming down the road. We know that this economy is not going to heal because we've got too many politicians playing games. We've got the Federal Reserve. I'm not quite sure what they're doing because they acted so slow in the first place. So I personally do not have any confidence in where we're heading at the moment. Hopefully we will see some turnaround, but so far I'm not seeing it. Banks are doing great because they've got high interest rates that they're making good money on. So we have got, as an individual, to sit down and go over our budgets. And we have to be very careful about this, especially those of you who are now having to pay back your student loans. You've got to budget this into your budget for 2024. So if you need a budget worksheet to help you, where you can compare budgetary numbers compared to actual numbers as you go through the year, I've got one that's free for you, and it's in my website, and I'll put the link down below for you to use. But you need to start budgeting. All of us need to budget. All of us need to know exactly what we're spending our money on, what monies are coming in first, what our expenses are going out, and what our net results are. Because we need to start saving. And at the same time, those of you who have got debt need to pay down that debt as quickly as possible. So if you know what your budgets are, you know what debt you can hit harder than others, starting from the lowest amount of debt going all the way up to the highest amount of debt. So we have a job to do. We have a responsibility for 2024 to get our financial act together. So I'm going to put that link down below for you to use, and use it because it will help you. And there are other apps online that you can use also that you can pay for on a monthly basis, and will automatically download your banking information into that app, and you can see exactly where you are. You'll just have to move around the buckets of expenses and income to make sure you got them in the right places. But it's vital. It's very important that every single one of us, and I have to stress that now more than ever, because it's going to be a long haul in this inflationary, recessionary time, and we have to take responsibility. That's it. This is Mike Lodge. Listen, if you want to ask a question, send it to thebusinessadvisor@gmail.com. If you would like to sit down with me and go over your budget, I'll be more than happy to. And if you would like to ask questions and work with me confidentially, you can do that. And you can schedule an appointment with me online at www.lodge-co.com. So if you go right here, you see all this information? It's right there. Use it. Talk with you soon. Bye-bye, and God bless.